Hello, I'm Ed D'Agostino. Today I'm speaking with Dan Tapiero. Dan is a global macro portfolio manager, and he's also the co-founder of Gold Bullion International, partners with the Hard Assets Alliance. We're going to be speaking about the markets and what is going to drive gold prices higher. Dan, great to be with you.
Ed, good to be with you.
Tell me, is gold entering a bull market now with everything that you see?
Yeah, no, I think generally there are a lot of reasons. I mean, there are quite a few that I think would argue that it is. One of the things that I think is really basic, simple to understand, and many people don't realize this, is that gold has been in a big bull market against every single currency in the world except the dollar. And, you know, I think it's hard for people in the US to understand that. We don't normally think about Turkey or Brazil or Canada. And I think if you look at some of the charts of price, you know, you can see a basic chart here from the gold price normalized to 100 from 2000. First of all, you see how much it's rallied. But the US, again, is the lagger. Take a look at gold yen. You can see gold yen is almost back to its all-time high that it made in 13. Gold dollar, again, at the bottom. Gold CAD as well, very strong, and even gold euro near the highs of 11-12. And if we look at a slightly different time frame, you can see more closely here gold since 2008, and again the leader actually since 2008. You see here Canada, and also yen, gold yen up near the highs. You can see from 2011, which was the dollar peak, that the dollar is lagging significantly, and as I mentioned, those two other pairs. But even gold Aussie is very close to where it was at the high. Now, if you look at some of the gold against some of the emerging markets, I mean, it's quite remarkable. The gold against the ruble, and we know they have had problems there, and gold against the Turkish lira is far surpassed where it was in 11 and 13. In some part, this is, yeah, the strong dollar against these currencies, but they've had problems there. And as a local, if you're Brazilian or Turkish and you have not, let's say, switched to gold, and your assets are in local currency, you've lost a huge percent of the value of those assets. So in some cases, people in those countries have been buying gold. In some cases, not. In some cases, the move has been more against the currency. And again, you can see gold against South Africa, also quite, you know, at the all-time highs. And then this is such a clear example here, the dollar, gold against the dollar, has barely moved in comparison.
But what's interesting is you're not just picking out emerging market currencies. You're essentially saying gold against every currency except the dollar.
Yeah, every single currency, it's, you know, close to or at the all-time highs. So it doesn't quite make sense, except for the fact that generally Americans have never bought gold in the way that foreigners have, especially Chinese, Indians. We know that they make up at least 50% of demand. I didn't show gold against the rupee, but that also has had a huge move. I think the rupee in the last 3 years, it might be down about 100%, maybe 3 or 4 years against gold. So these are significant moves. And in some part, I would just say anybody who looks at charts or markets would just say, look, it's lagging. At some point, obviously, it will catch up.
So it's not necessarily dollar being infallible. It's just sort of a relative play.
You know, I think the gold, you would say, looking at these things, is the #2 performing currency in the world. You know, it may not be better than the dollar at this point, but I think recently you've seen some very interesting things. I mean, dollar euro is basically unchanged at 107, 108 the past few months, but you've seen a 15% move in gold. So gold has outperformed the dollar and it outperformed just about every currency in the world now. And it might be the beginning of the realization by Americans that, you know, a small allocation to gold or some allocation, you know, would help buffer their asset exposure, because as we know in the last 6-7 weeks, gold has outperformed the US equity market by over 20%. And so if you'd had just a little bit of gold, you know, you could have
offset your loss.
Yeah,
sure.
to some degree. As we know, some of the well-known better investors have had 5, 10, 15% in gold, and they've been in the press. Ray Dalio, Stan Druckenmiller, we know people have been advocates. So maybe that mentality is beginning to change a little bit.